Yeah, they will just send one.
So we're going to get ready to get started in about 2 minutes, okay? I know everybody has lunch break and you want to get back to work, and we're going to send you back to lunch happy, okay? It's not going to be a starchy or a real tight situation. It's going to be an energetic, fun, and learning situation.
A little bit. What you up to?
Is that okay? All right.
Daddy, what is the wrapping paper on the computer?
That's a good question.
I have you got to pop them over.
And you should also have, you didn't grab one, there's an agenda, I'll let you know exactly what's happening.
When I was growing up, I played outside. I'm immune to all this stuff.
Did you just start the camera? Dad, you started.
Oh, okay. You ready? Okay. Well, I'll tell you what, it is now officially 12:33, and we're going to go ahead and get started, ladies and gentlemen. It's now 12:34. And I am going to turn on the microphone. Testing 1, 2, 3. Testing 1, 2, 3. Everyone hear us? Okay, great. Good afternoon, ladies and gentlemen. Welcome today to the Houston Municipality Employees Federal Credit Union Financial Fitness Workshop provided to you by Deransburg International. You're going to learn today what's called the 7 spheres of money. My name is Dale J. Deransburg Jr. I am your host, and I'm also the founder and president of Deransburg International. We have been hired by your credit union to provide you with a fun, fast-paced workshop to teach you some basic principles of financial success. Now, you're not going to learn everything today in this little brief seminar, but this seminar is giving you a commercial of an actual seminar that the credit union is going to provide for you at your volunteer recommendation or your request. That seminar is a fast-paced 2.5-hour seminar. 2.5-hour seminar that's going to teach you 136 principles of financial success. It's going to give you 4 definitive benefits. Number 1, to my what's called stage left, you're going to receive a 20-page comprehensive financial education plan upon your request. Number 2, you will receive what we call a financial improvement workbook. And that workbook is going to look something like this, but it's going to be in a paperback copy. Eddie, can you give me that workbook, please, sir? The third thing that you will receive upon your request, you'll receive actually 4 complimentary consultations from our today's sponsors. And I'm going to introduce our sponsors as well. Each one of these individuals and entities have between 7 to 20 years of experience in their respective field. We have collectively over 115 years of experience and expertise. And we have dealt with as little as one-man operations, as large as multiple national organizations that have done billions and billions of dollars of business. So we're not too small and we're not too large to help those who want to be helped. This is what the financial worksheet booklet will look like. What this booklet will enable you to do is for you to go out and to vet any professional that you need to build a strong relationship by asking the right questions. How many people here sometimes are concerned about getting the right information or intimidated by the advisors when they sit down with them at the table? Have anybody ever had that experience? I know I have. What this book will enable you to do is actually sit down and ask each professional in the 7 spheres of money the right questions at the right time to help you leverage your assets. Is that fair, ladies and gentlemen? Okay. And the 4th thing that you'll receive is the class in of itself. And the class is actually a satisfaction guarantee. So we're not here to sell you any products or service. We're actually here to sell you pure education at your station and your life. Is that fair? And we're also here to have fun. Okay? So, without further ado, we're going to kick this off. I want to introduce to you one of our youngest VPs and my protege, and his name is Rodney Bradford Deransburg. He's actually the VP of Youth Business Development, and since we own the company, today is Father and Son Day, he's actually coming out to help you guys understand that financial education is no big deal, and it can be learned as early as 6 years of age. Ladies and gentlemen, Rodney Bradford Deransburg, he's going to read you a chapter real quickly from the 21 Secrets of Success, Becoming a Self-Made Millionaire. Rodney, take it away.
Hello, ladies and gentlemen. I'm Rodney Bradford Deransburg, and I am with Deransburg International and the 7 Spheres of Money. Today, I am going to read you a book about the self-made millionaire, 21 Secrets of Success. 7 secrets. Dedicate yourself to lifelong learning. Continuous learning is the minimum requirement for success in any field. Dennis Waitley. You have a virtually unlimited capacity to learn and improve in your chosen field. You have more brain ability and intelligence than you can ever use if you were to work on developing yourself for the rest of your life. You are smarter than you can even imagine. There is no obstacle that you cannot overcome, no problem you cannot solve, and no goal you cannot solve, by applying the power of your mind. But your mind is like a muscle; it develops only with use. Just as you have to strain your physical muscles to build them, you have to work your mental muscles to build your mind as well. The good news is that the more you learn, the more you can learn. Just like the more you play a sport, the better you get at the sport. The more you dedicate yourself to lifelong learning, the easier it is for you to learn even more. Leaders are learners. Continuous learning is the key to the 21st century. Lifelong learning is the minimum requirement for success in your field or any other field. Make a decision today that you are going to become a student of your craft and that you are going to continue learning and becoming better for the rest of your life. There are 3 keys to lifelong learning. The first key is to read in your field for at least 30 to 60 minutes each day. Reading is to the mind as exercise is to the body. Reading for an hour each day will translate into about 1 book per week. 1 book per week will translate into 50 books per year. 50 books per year will translate into 500 books over the next 10 years. Since the average adult reads less than 1 book per year, when you begin reading 1 hour per day, 1 book per week, this alone will give you an incredible edge in your field. You will become one of the smartest, most competent, and highest paid people in your profession by simply reading 1 hour each day. The second key to lifelong learning is to listen to audio programs in your car as you drive from place to place. The average person sits behind the wheel in his or her car 500 to 1,000 hours per year. This is the equivalent of 12 to 24, 40 hours or weeks, or as much as 3 to 6 months of working time that you spend in your car. This is the equivalent of 1 to 2 full-time semesters at a university. Turn your car into a learning machine into a university on wheels. Never let your car motor be running without an educational audio program playing. Many people have become millionaires through the miracle of audio learning. This is why audio learning is often called the greatest breakthrough in education since the invention of printing press. A third key to lifelong learning is to attend every course and seminar you can possibly find that can help you to be better in your field. The combination of books, audio programs, and seminars will enable you to save hundreds of hours and thousands of dollars and many years of hard work in achieving the level of financial success that you desire. Make a decision today to become a lifelong learner. You will be amazed at the effect that it has in your career. Lifelong learning can be a major factor in your becoming a self-made millionaire. Action exercise. Select a subject that can really help you to be more productive, effective in your field. Set a goal to master this subject. Make it a do-it-to-yourself project. Then read on this subject every day. Listen to audio programs on the subject. Work on this as if your future depends on it because it does. Thank you.
Thank you very much, ladies and gentlemen. Great job, Rodney. You did a great job. Ladies and gentlemen, the reason why I do that is because education is fundamental and it's easy as 1, 2, 3. And most people do not like financial education seminars. Anybody want to raise their hand to that? It's almost like going to the dentist, right? But guess what? If my 6-year-old son can learn, guess what? We can learn together and make it fun and win together in 2010. So, first thing I want to do now is introduce to you our 7 spheres of money experts. We're going to start to my left with Michelle Rodriguez. She is from HSW Financial. Would you come on up, Michelle? Michelle Rodriguez is extremely accomplished young lady, and she actually has a great career track in commercial real estate, has managed several millions of dollars throughout the country. She also has been in the banking industry as well, is that correct? And she also has been in the Houston market for the past several years, helping people create alternative ways of investing on par with their 401k investment strategies. And she's going to talk to you a little bit about that. She's going to give you 3 tips today on how you can look at some other more safe investments, just like a CD or a mutual fund. Okay? Ladies and gentlemen, Michelle Rodriguez.
Hi, how's everyone doing today?
Great.
Okay. Well, my name is Michelle Rodriguez. I'm president of HSW Financial. HSW Financial is a non-traditional financial institution that services a $600 billion industry. That industry is called the equipment leasing and finance industry. And we don't grow our business traditionally like normal banks and leasing companies. We do it strategically. And that process is through commercial debt buying opportunities that we get. And ironically, those opportunities come from the traditional banks and leasing companies. The capital markets and the credit markets have changed, with lenders, investors, regulators, and rating agencies tightening their belts. Liquidity has never been more important. It is a daily struggle for equipment leasing and finance companies to control cost and increase revenue. Delinquent payments affect corporate cash flow. Every penny counts. Yes, the economy is down, but it's not out. We the people have to get inventive, develop a more business-savvy approach to the future. Innovation is what brings life to our purpose. Coming here today is just the first step. We must educate ourselves on the opportunity to turn things around. Deransburg International Learning Institute for Financial Education has answered that call. HSW has answered that call. Will you? HSW has become the pioneer of maximizing our clients' value chain with an array of programs that are outside of the box. Programs that you can take advantage of as entrepreneurs. And through that, taking advantage of that opportunity, there is great benefits. And what I generally like to call those benefits is double-digit returns as a commercial debt buyer. Really, the roadmap to such a return is quite simple, and that is because we just don't originate. Friends, in less than a decade, the commercial debt buying industry has evolved far beyond the cunning investment mentality that gave birth to the industry. Commercial debt buyers have become very sophisticated professional service firms offering capital market and investment banking expertise, private label servicing and recovery capabilities, portfolio evaluation, risk management, and consulting services, and a comprehensive training and education platform. It has been my experience that average companies focus on managing risk. Successful companies focus more on maximizing opportunities than managing risk. But the best companies are able to do both by constantly exploiting opportunities in a risk-managed environment. Enter the International Commercial Debt Buyer, HSW Financial. I encourage you all to attend our next seminar, which is on May 27th. If you want to get some more information on that, you can stop by over there to the left at the table over there, or you can visit us at hswfinancial.com.
Thank you very much, Michelle. Our next sponsor expert is going to be coming to us from Richmond, Texas. This gentleman is an actual mentor of mine. His name is Steve Host, and he is the founder and president of the Host Group. He actually provides services through securities, insurance, and real estate. Mr. Steve Host has been in the business for over 30 years. Ladies and gentlemen, Mr. Steve Host of the Host Group.
I'm an insurance agent. We have the other businesses. But you know, one of the key things to finances, at least for us as individuals, is, gosh, look at how much money we spend and we give that insurance company every single month. That's part of our financial future. How much money are we going to give? What are we going to get in return? So what we like to bring to the table is an understanding of what is insurance, how much do I need, and what am I paying for? So for instance, the last Hurricane Ida, there was one company that stood out above all other companies in paying claims. As a matter of fact, they paid out 92% of the claims in Ida faster than the other company. Anybody have an idea who it is? Who said it? Raise your hand. Who else? Somebody else said it. Here, I'll let you, and you be honest, and whoever else said it, there's 3 more $5 gift certificates to Valero.
All right.
And the reason I picked Valero is it's a local company, Texas owned, but they have great gas, right, and a good price. And that's really what you want in insurance. When you're talking about your finances, you want to try to save as much money, but you need to understand the coverage. So my suggestion would be get with your agent or get with your company. You can always call us, we put our card there, and ask the hard questions. Make them explain to you, what am I paying for my coverages and why? For instance, let's say you guys are driving down the road and you have your neighbors in the car with you. You have one of their children with you, and you have an accident, and it's your fault. And that neighbor child in your car, maybe it's a carpool, is hurt and hurt bad. What part of your policy is going to cover you? Anybody have an idea? Why do you have, there's, ma'am? That's what everybody thought. You know, when I became an agent, that's what I thought too, and I had to argue with them, and they said, Steve, you just became a new agent. This was 15 years ago. You don't know. It's the liability. It's third-party liability. So that basic part of your policy that a lot of us say, hey, I want full coverage, and we don't stop and look at the actual liability part of our policy. Now, have your agents ever explained to you why they're trying to sell you med or PIP? Or what does liability really cover? Or what is uninsured motorist? Please explain to me. Those are the questions you need to ask. And then also ask, now, I'm carrying a certain deductible. Why? Why shouldn't I carry higher? Why should it be lower? Tell me, what are the benefits? So one of the things that I'd like to leave you with, and I'm going to turn it over to Mike, is ask questions. Don't give an insurance agent or a company money without you asking the hard questions and getting a straight answer. You know, the best answer you'll ever get from them, and I really believe this, is the business person will say, you know, I just don't know. Let me call an underwriter and find out, because I've never had that. And if you don't have a business professional with you that is willing to say, he or she, I don't know, then it's probably kind of works. So anyway, that's just a tidbit. Thanks, guys.
Ladies and gentlemen, Steve Holtz. Our next professional, which is actually part of the host group, is a gentleman named Mr. Mike Kuras. And Mr. Kuras has been in the securities investment business for over 30 years. And he's managed multiple $1 million of portfolios for high net worth individuals and institutions. But here's the great thing. A lot of people don't realize that these professionals are at arm's length reach to them, and they're very affordable to actually help you out. Would you guys like to have help from somebody actually is a claim accomplished and speaks to you at a 6-year-old level so they don't intimidate you? Wouldn't that be a great opportunity? Well, ladies and gentlemen, without any further ado, another member of our awesome 7 Spheres of Money team, Mr. Mike Kuras.
Thank you. How's everybody this afternoon? I'm going to give you 3 quick financial tips. First one, how many of you have children or grandchildren? Have you ever heard of a college 529 plan? Who has heard of it? Who hasn't heard of it? There's a few of you. It's putting money aside for your children and grandchildren that's going to be protected from debtors and creditors, because the beneficiary is your grandchild, that can be used to help offset the cost of any secondary or higher education. It grows tax deferred, and when you need the money, you don't pay taxes on it. And a lot of clients that I deal with never heard of it. So 529 plans. Number 2, how many of you know people who have what I call lazy money?
What's lazy money?
That even do you. What? It's sitting in the bank. It's the number 1 answer. And you know what? How much is the bank paying you? Nothing. Number 1 answer too. CDs, they're paying less than 0.3%. You worked hard to put the money in the way. Who's keeping what I call the juice is the bank. There are products in the market, very affordable, that you can get anywhere from 3, 4, 5% that grows tax deferred. The only time you get money from the bank is what? When the bank goes under. How many times has that happened? Last time it happened was really in the Great Depression. You know who saved them? The insurance companies. So that's tip number 2. Tip number 3 has to deal with overall financing. You've got your property and casualty. You've got your business. You've got to look at them together. They're not 2 separate entities. You merge them together. We are not fee-based. As Steve said, we will visit with you, sit down, and talk with you. I'm 62 years old. I got 38-year-olds. I got little grandkids. So what I try to do is gear the presentation towards the individual. And I don't like speaking in 50-cent words. And if you don't understand it, we'll go through it again until we're all clear, because it's, whatever we do, it's your funds, your assets. I want to help grow them for you. So again, I'm just part of the host group, and some of my cards are up on there for you, and look forward to working with you. Thank you.
Thank you very much, Mike. Is that great information so far, ladies and gentlemen? Well, have you guys seen this commercial that has been running on every channel recently, where they open up on the scene of a restaurant? There's a lady and a man at a restaurant table, and the lady starts to ask the waiter about 1,000 questions. Anybody seen that commercial?
Yeah.
She's asking them how the meal's gonna be served, what's the special and everything, and then immediately they do a cut to the doctor's office. And the same lady is sitting at the doctor's office, and the doctor says, "Miss, do you have any questions?" And all of a sudden she's like, no, I don't think so. Guess what? That's the same experience that we have every time we sit down with our financial professionals. We ought to be the ones that are at the first scene asking all the questions. One of the tricks to success is to be willing to ask the questions and also get the answers at a layman's level. And what we're going to do here is we're going to debunk and demystify those challenges that a lot of people come in contact with. I've been doing this for over 10 years, and we've done over 1,000 workshops and classroom courses throughout 7 states. And one of the reasons why I want to introduce you to this great team is to let you know just what Mike just said. Instead of you having a professional or professionals that are competing for one of your dollars so they can get their 33 cents, wouldn't it be great if you had those professionals sitting along a round table, you at the center of the round table, and they're giving you the best information out of every financial industry to help your dollar become $11. How many people would like to sign up for that program? Absolutely. Well, that's what we're going to teach you today. So our next expert that we're going to introduce you to, since tax day has just gone by, everybody got their taxes done? Everybody were excited about their tax return? How many people like to pay more taxes next year? Raise your hand. How many people like to get more back next year? Raise your hand. Okay, tell you what, if you don't change anything today, you're probably going to take less. So now I want to introduce you to our team CPA, a gentleman named Ronnie Alexander. He's been in the accounting business for over 27 years. He's a graduate of TSU, also has an MBA as well, and he also is consumer debt-free. And one thing you'll find out about our professionals that all of them at some point in time are either financially independent, debt-free, or own their own homes with the actual deed and no debt. How many of you would like to have that experience relatively soon before you retire? Without any further ado, I give you Ronnie Alexander.
Good afternoon, everyone. One of the things that I always like to reiterate whenever I get up to talk to anyone is that you have to be educated. Just like his son got up here to tell everyone, education frees you. And with proper education, you can have proper execution. So everyone, you prepared your taxes. How many got a refund? Was your refund over $1,000? If it was, you did for a plan. Don't let anyone hold your money interest-free. You always need to plan throughout the year. Tax planning doesn't start January 1st when you get your W-2 and start preparing your taxes. It started January 1st. What you need to do, if you owe money, what you need to do is go in and adjust your withholdings. You need to scale back to let them take out more so you won't owe at the end of the year. If you got too much back, you need to adjust upward because you want to, at the end of the year, I know people like to use this as a savings vehicle, but it's crazy to let someone use your money interest-free. At the end of the year, your balance should be at or close to zero. That means you got every dollar that you were entitled to in your hands so you could spend. If it's the other way, then that means they're going to charge you interest for what you owe them if you don't pay in a certain amount. So when someone comes to me, the first thing we do, we sit down and talk about it. Because I think education sets you free. I had a couple in yesterday. They told me that they paid $95 and they had a problem with that. I said, your planning was almost perfect. That means that you got all the use of all your money during the year. You don't want to wait, unless you're planning a shopping trip, unless you like to give away your money, then that's what you do. Give it away to get the refund back. Also, be aware that stimulus issues are about to play out. tax breaks that they've been given, realize that they're only temporary. So as you go forward, you need to make the proper adjustments. Assuming that everything stays the same, you know where to adjust. Also, if you owe $800 at the end of the year, you have half a year's left. It's going to come out the same way if you don't plan now. So what you do, go in, have them take out a little extra so you won't owe anymore. Or find some other deductions somewhere. Deductions will come and go, but planning will set you free, always. And if you do your taxes on your own, get educated in that regard as well. Just because the software says that it's going to walk you through the process doesn't mean that you get everything you're entitled to. I use software as well, but that's only for mathematical purposes only. I know when something isn't right when I look at your tax form. I'll say, wow, it missed this right here. That could have been a couple of $1,000 in a refund for you that you were entitled to. So don't always rely on machines to do what education will allow you to do. One more thing, and then I'll close. If you choose a professional and they never talk to you, find another professional. I'm serious about that. I've had people come to me and say, well, all I did was give them my paper. We spoke, talked about the fishing trip for 15 minutes, and then they generated a tax return for me. What did you get out of that? You need to pick the brains of your financial professionals because they have education in there and you're entitled to it. Don't wait till the end of the year to talk to your tax professional. Talk to them about purchases you're going to make. Is it tax beneficial for you to do that? And everyone knows that the homeowner's credit, the $8,000 is about to go away. So if you're in the market to buy a home, you need to get it done by the 30th. But talk to them about your financial situation. Well, can you really afford this? So always, if you have a professional that doesn't take the time to talk to you, find another professional. Thank you.
Good job, Ron. Okay, we're going to move right along to our next financial expert. And this happens to be our AFLAC expert, which a lot of ladies and gentlemen with the city and the credit union have AFLAC representatives, and you just had an open enrollment, I understand. This young lady has been with us for over a year and a half. Her name is Kadis Anafu, and she has over 10 years of experience with AFLAC, and she is one of their top producers. Ladies and gentlemen, Kadis Anafu.
Hi, everybody. Like you said, everybody knows AFLAC, but I want to kind of explain to you also how AFLAC works. Everybody knows major medical, they pay the doctors, the hospitals, and all that, but nobody plans for AFLAC because it says supplemental, and we always think, who needs supplemental line? The fact of the matter is, a study was released by the White House. Bankruptcy is filed every 30 seconds in this country. Out of that, 68% of it is people that have major medical in place but could not keep up with all the out-of-pocket costs, whether it be in and out of network fees, co-pays, deductibles, all the other expenses that we fail to plan for. And that's where your AFLAC policies come in. And since today is a financial planning day, preparing for the unforeseen is what we need to do. Everybody thinks insurance, I don't need it, I have major medical in place. Well, you're taking care of your doctors and your hospitals. What about you? If you're out sick at home, injured, or whatever the case might be, your regular day-to-day bills, your mortgage, your car notes, utilities, everything keeps piling at you and you have no income coming in. But if you have AFLAC or any other supplemental line in place, they're sending you the check directly to you so you can keep up with your day-to-day living. Those are the things that we need to plan for. And I'll just keep it sweet and simple. So I know through the city of East City, there are maybe 4 or 5 products that you're offering. AFLAC has over 14 different product lines that we have. So feel free to pick up the brochures and see what else is out there, even though you're not getting it through your work site, you can get it directly. You don't have to get it through work site. So get the information, empower yourself, and make those decisions that affect yourself and your families. Thank you.
Great job, great job. See, a lot of times we don't know what we don't know. How many people this year would like to cut their expenditures by 20%, but still have the same things that you currently have? Anybody? Guess what? That's what we're going to teach you today. So right now, how many people want to win some more free stuff? You like free stuff? Well, we're about to bring up Miss Janet Askew. You actually signed in at her table, and she's about to raffle off a couple of her gift cards. And then I'm going to give you 15 minutes of powerful information that over the next 6 months, if you apply it and you attend a course as well, your family household will be able to save $7,500. How many people will be excited about saving $7,500 this year? Would that be exciting? Man, boy, you're a tough crowd, I tell you. I get excited saving 5 cents. So I know you can get excited saving $7,500. Tell you what, can everybody do me a favor? Can everybody stand up, please? I want you to say something with me, okay? Stand up, please. Come on, let's shake it out, because we're going to get ready to go back to work fired up, okay? Here's what I want you to repeat with me. Dale, I want a pom-pom lifestyle. Plenty of money, peace of mind, because I want to win in 2010. All right, come on up, Janet. Somebody be kind enough to pull out of the basket for the first, or actually the fourth prize we're giving out today. Everybody having a good time? All right, good stuff. Going right on. Next one.
647-2130. Right here. Six, 4-7-2-1-3-5.
There we go. We got a winner. All right. Good stuff.
Yeah. Plus I take 4 of us for the
All right.
reduce the amount of.
Good stuff. Hey, we're going to be giving away a lot of stuff. Are you guys ready to have a pom-pom lifestyle? Yes. All right. Let's say, hey, bring it on. All right. Well, let's get started. Here we go. Seven Series of Money Finance one-on-one presentation. We're going to do this real quickly. We were started in 2002. Okay? So we have helped over 700 people since 2002 become consumer debt-free. How many people would like to be totally consumer debt-free? All right, good stuff. We also have a class that's engineered for kids as young as 13 years of age to come through to get some financial stewardship. How many people, kids that have kids, think that they're ATMs? Raise your hand, come on now. ATMs? How many people's kids have cell phones? Okay, you're a tough crowd, no problem. All right, we're going to teach you how to live debt-free and financially secure first and foremost. Let me give you a quick tip. You want to learn how to save 17% right away? Let's get rid of those credit cards. That makes sense? Before we teach you anything about investing, first thing we're going to teach you is how to be debt-free, because that's how you control your life. Would anybody agree or disagree with that? Absolutely. Let's do that, okay? Well, we're going to give you, as you said, did you like our professionals that came up on stage so far? A very diverse, very accomplished group. How would you like to have 30 minutes complimentary sit down with them one-on-one and have them answer your most challenging financial question? Would that be a benefit to you? Absolutely. We're endorsed by businesses, churches, and schools across the country. And we specialize our programs, like Mike said, for the individual. Guess what? Everybody's financial situation is different. But you know what? We use the same ingredients. So So we just have to learn how to bake your chocolate cake and my brownies. We'll do it one person at a time. Would that be fair to you, ladies and gentlemen? Absolutely. Great. You're going to get access to the consultations upon your request, and there'll be at least 30 minutes. You can either do it in our offices or at the privacy of your home, whichever one you feel best. Okay, ask yourself this question. How many of you are debt-free? By show of hands. Good stuff. How many of you need to be debt-free? Raise your hands. Okay, let me share something with you. 2002, I walked out of the life of the dead and into the living and became totally consumer debt-free. In 2004, I owned everything that had my name on it except for one property. That created financial independence in my household. Was I a multimillionaire? Absolutely not. But you know what? I come to find out, ladies and gentlemen, at $50,000 a year, debt-free in America, you can live like the top 5% in the country and control your days. How many people like to get up in the morning and work on Monday and work on Friday? Be honest with me. Okay, great. You know what? Since I got free, I don't do Mondays. Very rarely do I do Mondays. Very rarely do I do Fridays. Not because I'm better than you, but guess what? I decided I wanted to spend most of my time with my son, his brother, and my little daughter, and my wife. And I realized that when I worked in the corporate environment, not that it was bad about it, those were the worst days for me. I wanted a Tuesday through Thursday lifestyle. How many people want to move towards a Tuesday and Thursday lifestyle, make the same money, and be debt-free? Can I get a round of applause for that? All right. So, we're going to teach you how to know the 4 quadrants of credit in this class. So I'm just going to give you the commercial, okay? All right. So, importance of financial planning, real quickly. This is a rule from the Learning Institute of Financial Education. Not from the government, not from your advisors, but this is our rule. We firmly believe that you should abide by what we call the 10-20-70 rule. Number 1, give. Do you realize that money only makes you what you are? If you're a bad person, it makes you worse. If you're a good person, it makes you better. I firmly believe no matter what you believe in, you should give away 10% of your earnings right off the top. Second, you should take that next 10% and pay yourself first. How many people actually pay yourself first before you pay any of your bills? Be honest with me. Raise your hand. Guess what? Everybody needs to be doing that. I don't care if it's $1 a month. Pay yourself first, because what you're doing is conditioning your mind psychologically to start hitting your goals to become debt-free, financial independent, and start on your way to a pom-pom lifestyle. How many people want to join the Vacation of the Month Club? Would that be great? How many people think that that's not even possible? Be honest with me. Raise your hand. Do you know that a lot of people, it's not what you earn, it's what you keep? And you probably said, Dale, I've heard that before. But ask me a question, or answer me a question. How many of you are applying that on a regular basis in your life? What we're really here to do is to be your stewards, to give you a little kick in the butt every now and then, to stay on that path. You know how when you have kids and they do something that's not right? I'll give you a great example. My son knew he was supposed to hang out with me today, but he forgot to get ready. So I said, son, we got to run. And he said, Dad, I want to come with you. I said, okay, this time I'm going to stay a little bit later, get you prepared, and come out. But the next time, you can't go. Because you got to be professional and be prepared to be successful. Isn't that right, ladies and gentlemen? It's the same thing for you and I. We all need a kick in the butt every now and then. Would you agree with that? You won't get mad at me if we save you 30% this year, will you? If we give you a little soft kick in the butt. Is that okay? 3 rules. I want you to write this down. Number 1, what are your expectations from your advisory team? Number 2, what are the responsibilities for your advisor and your responsibilities? And number 3, what is your covenant to accountability? Let me give you that again. Number 1, what are your expectations from your advisory team? Number 2, what are your responsibilities for your advisory team and your responsibilities? And number 3, what are your accountability covenant to hold those 2 rules in place for your success? Okay? Because most professionals are going to try to compete for your dollar versus helping you multiply your dollar. At our program, the 7 Spheres of Money, we're going to actually take your dollar and show you creative math. We're going to take 1 plus 1 will equal 11. Because all of our industry experts will sit around the table and give you the best advice. It's like Mr. Ho said, if I can tell you the right way to get insurance and property and casualty and save you 20%, I just made you money, right? Now I can take that 20% and maybe invest with Mr. Kuros and get more return versus the bank. How many people would like to do that right now? How many people love their bank? I don't. I love my bank. How many people would like to become the banker? Yeah? All right, good stuff. Then we can take that information, put more assets in our 401k, and then say, you know what, I still have a little left over. Wow, HSW was a great program. It's just as secure as my current investment. Maybe I want a double-digit return at this point in time. Wouldn't you like to have those options? I surely did. Okay? So, next thing, let's move right along. Live on 70%. Okay? Now, here's what people have been told. 74% of workers fret about their financial situation. How many people here really do worry sometime about their finances? Let's be honest. We just went through a very rough recession, correct? Do you know that we're going to be the first generation that our kids may have a worse lifestyle than we have, based on us not having the resources? And do you also know, conversely, that we actually make more money and we're more wealthier than we've ever been in the history of the world, but we are not the greatest stewards of our money as we could be? We need to make that correction very fast, okay? Second thing, 15% of 401k investors get advice. Why not 100%? Does that make sense? Okay? Now, that may keep you up at night. When we're at work, we should be giving our employer 100% of our effort, right? When we're at home, we should be giving our family 100% of our effort. If not, you have a natural conflict of interest. And I got tired of that. So I fired one of the ones, and I became my own thinker about my own legacy. Nothing wrong with that. I love a job. But a job is only going to get me so far to accomplish my goals unless I love it 100%, right? Make sense? Last but not least, research shows that employees spend 27 hours a month thinking about debt or taking time off work to deal with their debt. How many people over the last 18 months lost at least 30% in their portfolio because of what happened in the economy? Let's be honest. How long do you think it's going to take for you to get that 30% back? A long time, unless you start doing something different. How many people want to get that money back? Raise your hands. Good. Let me show you where America is headed. This is an illustration over the last 8 decades. Americans have over $2 trillion worth of consumable debt. That doesn't include your house or your car. All those credible credit cards, savings and stuff that you get these coupons and stuff that have you buy more of the stuff on credit card programs. You ever seen that? I'll give you 10% off at ABC store to get my new credit card. You know what ABC store knows about you and I? That you're never going to pay that debt down. You're going to pay the basic minimums. And I know a lot of you are looking at me and saying, Dale, I know that too. But again, my question to you ladies and gentlemen, how many of you are applying it on a daily basis, a monthly basis, a quarterly basis, a yearly basis, and getting exponential returns on your investment by applying it with a little soft kick in the pants? Because if you were, guess what? You would be free today, or if not, you would be free in 12 to 24 months out of consumer debt. How many people want to get on that program? You want the pom-pom lifestyle? All right, let's get on to the pom-pom lifestyle. Now, conversely, Americans are actually saving less than we ever saved at any time since the Great Depression. 2 years ago, we were at a negative 2% across the country, median of negative savings. Now, guess what? We're at 2%. So I know some of you in the audience are saying, Dale, I saved 10, 15% of my income. You know what? I applaud you. But I'm talking about everybody, okay? So what we need to be able to do is teach everybody how to save 10 to 15% of their income. Let me tell you a quick story. Who do you believe is our #1 debt holder across the country? What country holds all of our debt? China. Do you know that the average middle income in China is about $30,000? Do you know that the average Chinese family saves about 37% of their take-home pay? The average household income in America is about $56,000, but we're saving about 2% of that. How can we keep up with it? Not possible if we don't change our ways. Is that not correct, ladies and gentlemen? Okay, let's go back to the illustration real quickly. I want to show you a survey that was conducted in April 22nd of 2002. This is by an organization called the Personal Financial Literacy Group. They took a survey, 4 basic financial questions. They asked a group of seniors in high school and a group of senior citizens 55 and older. The first question, ladies and gentlemen, was, what's the difference between a money market account and a CD? Sir, with a nice polo shirt on, would you be able to answer that question for me? What's the difference between a certificate of deposit and a money market? Okay? Okay, anybody want to add to that? You, sir, want to add to it, help them out a little bit? That's correct, but it's some other important stuff. Anybody want to help them out? Anybody? Yes, Lou?
I really couldn't hear, but I
What's
thought,
the difference between a money market and a certificate of deposit?
well, I didn't hear his response, but I thought the money market was liquidable and, you know, you can have access to it whether you write checks on it or not. And
Okay,
CD is locked in for a fixed rate.
okay. Well, guess what? Here's the actual technical answer. A money market and a CD. A CD guarantees your deposit, okay, for a period of time, from 3 months to as long as 5 years. A money market does not in most cases, but they both give the same similar rate of return, which Mr. Kuras had talked about, okay? Do you know that the senior citizens, 55 and older, only 75% of them knew the correct answer to that? Do you know that the seniors in high school, only 52% of them knew the correct answer to that? Now, second question was, what's the difference between a mutual fund, A share, B share, and C share? How many of you guys have mutual funds in your 401k? Raise your hands. Okay? How many of you know the difference between an A share and a B share? Now, if you don't know the answer to that question, like Mr. Holt said, you need to find out because you're invested in these vehicles and you're not getting the right information, thus how can you win? Real quickly, the difference between an A share can go over $100,000, generally has more fees up front, okay? What they call 12B1 fees. A B share is anything $100,000 or less, generally has lower fees initially, but after 7 years, it automatically converts to an A share, okay? Or at the point it comes $101,000, it immediately turns into an A share in a mutual fund. A C share in a mutual fund is for short-term investing only. It has no upfront fees initially, but it's only for investing for periods of 12 to 36 months. If you go past that frame time, you will now pay exorbitant fees, okay? Now, you're all intelligent, educated people, but if you don't know this stuff, guess what? Likelihood you'll come into that situation and you'll be penalized for it, okay? The third question really astounded me. They asked the seniors in both segments, if you invest in the stock market, are you guaranteed a return? What's the answer to that? Do you know that only 89% of the senior citizens answered that question correctly? Do you know that only 63% of the seniors in high school answered that question correctly? Guess what, ladies and gentlemen? We have multi-generational financial illiteracy in our society today. Would you argue with that? Does that not make sense for us to make some changes immediately? Okay? So, let's move right on. Let me give you some quick tips of benefits of living smart. This is to assume that you work 40 years, 40 weeks, and you retire at a decent age of 65. In our class, we're going to teach you some ways to take money, put it back in your pocket. Let's assume that you take $5 worth of coupons every week and get at least a 12% return on your investment. I know you're probably saying, well, how am I going to get a 12% return? If I just showed you how to cut your insurance costs by 20% and get the same insurance, is that not more than a 12% return if you didn't go out and spend it, right? So, with this illustration, that'll save you $101,000 over the course of 40 years. Not a lot of money, right? How about we don't buy lottery tickets at $10 a pop? That'll save you $203,000 over the same period of time. How about don't smoke a pack of cigarettes? I know we're not guilty of that. But what if we didn't do that? We could save over $500,000. How many people like to have an extra $500,000 at the end of a 40-year retirement? Absolutely. I do too. How about this one? Let's brown bag it. Ain't this event called the brown bag event? Take your own lunch. How about putting another $500,000 in your bank account? And worst but not least, how about not driving those new cars, but getting some sharp pre-owned cars? And I know a lot of you already have that, but over the course of 40 years, you can save over $800,000. The average baby boomer today who lives into their 80s will need over $1.5 million to sustain a $50,000 a year income. I've just shown you 2.3 million ways without taking an extra dollar out of your pocket if you're wise enough to invest in yourself, get a little education, get a team of experts around you to give you the right advice to leverage your dollar. Would that be a great plan for you, ladies and gentlemen? Can you get excited about that? Because let me tell you this, being successful is not sexy. It's the fundamentals and the simple things that actually help you win in life. Okay? Does that make sense? All right, let's go back on real quickly. How many people were taught how much it costs to raise a child? Two-parent income under $39,000, and nobody in here looks like they make less than $39,000. But guess what? It'll cost you over $127,000 to raise one child. So if you have two, do two. And this does not include the cost of college education. This is from 0 to 18. Two-parent income of $66,000, $173,000. Two-parent income over $66,900, which most of us are probably in this category, how about $254,000? Now, that was the amount based on 2002, so those numbers are actually about to double because the cost of money doubles every 10 years, okay? And these are not our rules, these are from the United States Department of Agriculture and MSN money. Don't we want to have our kids stand on our shoulders and start their lives from where we finished versus starting all over from ground zero? Doesn't that make sense? Well, how are we going to do that? By educating ourselves and getting the right team around us. Now, how is the rule of 72 working for you, you and your family, and against you? How many people here have credit cards by show of hands and consumer debt? Okay? How many people have interest rates that are over 7%? Okay? Let me show you a real quick thing. You want to go home tonight and you want to figure out how much interest is making for you and how much is you're paying to service your debt. Okay? Real quickly, the rule of 72 says take any number of interest that you are earning, 3%, divide it into number 72, and it will tell you how fast your money will double for you or double against you. Okay? And we all know that, right? But now, look at the category. There's 3%, 6%, 12%, 18%. How many people want to guess or bet with me that the banks know that 18%? They're getting that every day, twice on Saturday. Okay? How would you like to get that 18% return in your household? Real simple, okay? Real quickly, all you do is take the numbers, divide it into 72, and it'll tell you how to double your money. And I'm just going to pop these up here. We'll tell you more about this in the class. Okay? Make sense? And we'll show you some ways to actually accelerate. How many people are homeowners by show of hands here? Raise your hands, please. How many people have ever heard of the 50-25 rule? Did your realtor, your banker tell you about the 50-25 rule? Are you kidding me? And you want a pom-pom lifestyle? What is the average term of a mortgage? 30 years. Okay, thus, at the 15-year mark, you are 50% in the loan, right? If you have not paid any extra payments towards your loan, if you have not refinanced your house and you just bought it average, right? Typically, you will have only 25% equity position in that house. Thus, it's called the 50-25 rule. Now, how many people by show of hands have refinanced their house in the last 5 years? Okay? Now, here's a quick trick question. When you refinance your house, did you look at the interest rate or did you look at the term as well? Most of the time we look at the interest rate, right? Well, let me tell you a quick story. We did a class about 12 months ago, and we had it at a school, elementary school, sponsored the course. A librarian came through the class. Household income was north of $200,000, her and her husband. We sat down, they took the complimentary consultation, they were doing well. We picked up their financial information just to look over it to make sure everything was going right to continue to go in the right direction. We found out, unbeknownst to them and us, they were in the arm. They had a 6% rate. Their mortgage payment had went up in 6 months twice because they were so busy living lifestyle, taking care of their kids, that the money wasn't paying them. We looked at the information, brought it back to them, showed them the term, and they were in this loan only 5 years. We ended up putting them in a 25-year loan, shorten the term, and getting them a rate under 5%. Thus, right away, we saved $5,000. And we did that with the help of the whole school. And this family did not have a need for any financial help. But when we scrubbed everything, do you think they were happy by spending the time with us, coming through the class, getting a little bit of education? At the same time, we also lowered their insurance premium payments as well. How many of you would get excited about that? Would that be worth a value to you? So here's the thing you want to do. If somebody calls you and you do need to refinance, ask them, are you putting me back in a 30-year loan? or you put me in a same term I'm in at the same rate. Because here's a bad story we had too. 3 years ago, we had a young lady that just retired from a company, never made it to management position. She had about $150,000 saved up from her job, and her banker took all of her money, put it into a CD and annuity, didn't look at her cost of living expenses, and she only had about $4,000 left to live with. She never achieved the American dream of owning a home. We came in, she went through the course, we sat her down, talked to her bank, had them release her money, showed them what her recurring expenses were, and at the same time, she became a homeowner 12 months later for the first time in her life by just getting a little bit of education. So don't think that everybody is different from you, because we all universally are the same. We just don't talk about the things that trouble us the most. But when we're one-on-one, we can let you know that everybody has some similar situation to help you win, as well as show you when they don't know what they should know, and they end up losing. Does that make sense?